Ladies and gentlemen, good day and welcome to Solar Industries India Limited Q1 FY26 earnings conference call hosted by Phillip Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dipen Vakil from Phillip Capital. Thank you and over to you, sir.
Thank you, Palak. Good morning, everyone. And on behalf of Phillip Capital, I welcome all the participants for Solar Industries Q1 FY26 conference call. To begin with, first, I would like to thank the management for giving us the opportunity to host this call. From the management today, we have Mr. Manish Nuwal, MD and CEO, Mr. Monish Agarwal, Joint CFO, Ms. Shalini Mandana, Joint CFO, and Ms. Achal Kevlani, Senior FM and IRM. So, without much ado, I'll pass on to Achal to take it up. Over to you, ma'am.
Good morning and thank you for this. A very good morning, everyone, and welcome to this fiscal first quarter review conference call. My name is Achal, and I would like to welcome you all on behalf of Solar Industries India Limited. At the onset, let me restate. In this call, we might make projections or other forward-looking statements regarding future events and about future financial statements and performance. Please remember that such statements are only predictions. Actual events or results may differ materially. Our website will be updated with all relevant information from time to time. Now I would request our MD and CEO, Mr. Manish Nuwal, for his opening remarks on the company's performance for this quarter. Over to you, sir.
Thank you, Achal. A very good morning to all the esteemed investors. I, Manish Nuwal, welcomes you all to the Solar Industries earnings call for the first quarter ended on 30th June 2025. Solar Group reports resilient operational and financial results for Q1 25-26. We are pleased to announce that we have achieved our highest ever quarterly EBITDA and PAT of rupees 564 crores and rupees 353 crores respectively in this first quarter. The company's turnover stood at rupees 2,154 crores, registering a 28% increase over Q1 of the previous fiscal year. Solar sustained growth momentum on account of robust performance, particularly from international business and defense sector. This performance could have been even better had the early monsoon not affected the domestic explosive markets. This quarter, our international business recorded a 43% year-on-year growth, and in terms of quarter number, it stands at 826 crores, recording the highest quarterly sales. This performance was driven by strategic manufacturing facilities in 9 countries and our global distribution network across 90 countries. We are pleased to report that our defense revenue has also reached to rupees 418 crores in this quarter, reflecting a robust 115% year-on-year growth. With a strong defense order book of around 15,000 crores and commercialization of Pinaka orders in this year, we anticipate that the defense domain will achieve its next level of growth as per our guidance given earlier on the annual results. The successful testing of Bhargavastra and Rudrastra in this quarter reaffirms the strength of R&D capabilities of our company. Repeat orders for UAVs and multimode hand grenades have reaffirmed the quality of our products, bolstered users' confidence, and established us as a trusted partner in this Atmanirbhar Bharat initiative. The mining industry had lower demand due to milder heat waves, early monsoon, and geopolitical development tested the industry's resilience. However, we remain optimistic about the growth in mining and housing and infrastructure sectors in the upcoming quarters as the domestic cycle revives post-monsoon. With a proven global footprint and deep integration into commercial explosives, Solar is now strategically positioning itself as a global supply chain partner in the defense sector, unlocking new opportunities and enhancing the long values for the stakeholders. Backed by the 30 years of expertise, we have built a robust portfolio of high-impact solutions across mining, infrastructure, defense, and space. Our journey has been one of the transformation rooted in innovation driven by purpose. As we continue to unlock new growth opportunities, our commitment to performance and stakeholders' value remains stronger than ever. I sincerely thank all our esteemed investors and analysts for joining us today. Thank you very much. Over to Achal for presenting the financials in detail.
Thank you so much, sir. It gives us immense satisfaction to present the result of our journey, reflecting the efforts put in as profit momentum builds. We are exceeding the previous quarter's profits consecutively in a row, which gives us immense satisfaction and happiness. We achieved revenue of 2154 crores versus 1685 crores, increased by 28% year-on-year. Highest quarterly EBITDA at 564 crores versus 474 crores, increased by 19% year-on-year. PAT stands at 353 crores versus 301 crores, increased by 17% year-on-year. Now let's quickly review the quarter numbers. Revenue from Coal India was 238 crores versus 246 crores in the previous quarter, same previous year. Revenue from non-CIL and institutional was 348 crores versus 304 crores. Revenue from HNI, that's housing and infra, was 312 crores versus 353 crores. International revenue was 826 crores versus 579 crores, registering highest quarterly revenue with a growth of 43%. Defense revenue was 418 crores versus 194 crores in the same quarter previous year, registering growth of 115%. Coming to the cost breakup, raw material consumption cost was 50.80% as a percentage of sale versus 51.65%. Employee cost was at 8.53% versus 7.78% as a percentage of sales. Other expense cost was approximately 15.85% versus 13.90% as a percentage of sales. The interest cost was 1.27% versus 1.63%, and the depreciation cost was approximately 2.6% versus 2.37% as a percentage of sales. We reported PBT at 481 crores versus 408 crores. We already have our presentations updated on the website. Now we would be happy to take any questions, comments, or suggestions that you may have. Over to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may please press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vikas Singh from ICICI Securities. Please go ahead.
Thank you for the opportunity. So my first question is regarding our medium-term outlook of 200 billion revenues and 80 billion defense revenue. Have we basically inculcated the realm in Europe segment into that, and how big this opportunity could be us?
Can you repeat your questions again because...
Am I audible properly?
Yes,
Yeah,
sir.
yeah, you're audible.
Yeah. So, sir, regarding our medium-term 4 to 5 year outlook of 200 billion revenues and a defense revenue of 80 billion, is this also includes the opportunities which we are hearing in the Europe regarding the rearm Europe by 2030? Have we built in anything on that account as well? And if that, then how much?
So in the last annual result call, we have shared our plans at what we are going to achieve in this financial year, and what we are likely to achieve in next 4 to 5 years. So we stand by that, and you can refer to those numbers.
Okay, sir. Sir, regarding this news regarding 2,000 crore UAV male drone orders, I just wanted to understand where we place in that segment now. Opportunity size for us could be?
Yeah, this can be a big opportunity for the defense market. And as far as this program is concerned, plenty of companies will be participating. And we are also one of those companies who are interested to participate in this program.
Okay, sir. And sir, lastly, on 155 shell, if you could give us our standing on there and
So this is regarding, I think, 155 shell. So as far as this product is concerned, we have the facilities to make these products. We have already started working on that, and very soon we will start the commercial production of this product.
so just a clarification on the defense targeted revenue of 80 billion over the next 4 to 5 years. We have added this 155 shell in that segment, right?
So what I said that next 4 5 years numbers which you are trying to ask, you can refer to my last quarterly Concall numbers, and that is good enough for the guidance as far as the long-term trajectory of our company is concerned.
Noted, sir. That's all from my side. I'll join the queue if I have further questions. Thank you.
Thank
Thank
you.
you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your question to 2 per participant. The next question is from the line of Amit Dixit from Goldman Sachs. Please go ahead.
Yeah, hi. Good morning, everyone, and thanks for the opportunity. At the outset, congratulations for a good set of numbers, sir. Pretty good and solid start to the year. Couple of questions from my side. The first one is regarding Bhargavastra and Rudrastra. While you have mentioned in the prepared press release that there have been tests over there. So just wanted to understand the commerciality part of it, that when can we expect orders from these two platforms? And the B part of the question is essentially on the ammunition side, that the export orders, we received quite a bit of export orders last year. So what kind of traction we are seeing in this market, because this market is quite red hot at the moment?
Yeah, like I said that we have did some successful trials of Bhargavastra and Nagastra new series as well as Rudrastra. So as far as trials are concerned, we are going ahead on the qualification part quite well. It will take some more time. More time means in defense is couple of quarters where we will reach to the final qualifications. And once we are through with that, we can expect the commercialization of these products. So as you are already aware that in defense market, commercialization after the qualification also takes some time. So we are quite optimistic that these products are very much in demand, and once these are tested and successful trials being completed, we expect commercialization to happen at much faster pace. As far as the order book from international markets are concerned, like we have already shared, that we have a total order book of around 15,000 crores, and after leaving the Pinaka portion, the order book from international is around 8,000 crores. So we have received the orders, and now commercialization has also started, but ramping up definitely takes couple of more months, and once it starts, it will reflect in the numbers. So we will see the improved numbers from defense market, which will be in line with our annual guidance quite soon, or you can see from quarter 2 or quarter 3.
Great, sir. Nice to know that. The second one is on the international business performance, which has been by far the best if I look at past, history. Now, is it possible for you to mention just, qualitative details which markets are doing well for you at the moment? How is Australia, Indonesia faring? And also we had our plans to, go in Saudi and Kazakhstan. So we are on that because this segment appears to be very, very promising on non-defense side at least.
Yeah. So as far as overseas markets are concerned, the individual subsidiary-wise detail we normally share on in the annual report, so you can refer to that. But as far as the momentum, which is above the normal momentum in the numbers, is mainly on account of very good business from South Africa. Rest all subsidiaries are doing quite well, but South Africa is doing much better now compared to the couple of years back. And the performance is, we were eagerly waiting for this kind of performance from last couple of years. We were trying a lot to improve those things. And finally, we can see these good sets of numbers from South Africa.
Okay, sir, that's very helpful. Thank you and the best.
Thank you.
Thank you, sir. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thank you for giving me the opportunity. Just on the as exports continuously to do good, even in this quarter last year, and you said pipeline looks pretty decent. So how are you thinking about the CapEx now? Because we also keep hearing and reading articles that government wants their own requirement is very high at this point in time. So how are you thinking about of increasing capacity over the next 2-3 years if demand is so strong? Just one comment on that.
Like we are sharing on all our previous calls that Solar is one of the most integrated ammunition player in the private market, and we have established plenty of facilities, energetic materials, fuses, rockets integration, missile integration, drone facilities. We have done a lot on these parts, and we have received thousands of crores orders. So as we have said in our annual call that we are going to invest 2,500 crores in this financial year, and in the coming years also we have a strong strategic program to expand our facilities. So we are moving ahead on that part, and we will see that the capacities of Solar as a company will be one of the best in its class and of a global scale.
I got your point, sir. I was just asking more from that because demand is so strong, both domestic and exports have been highlighting. Do you see a chance of upgrading your capex? Is that what the question was more about?
So I think we have just finished the annual call just 1.5 weeks back. So in just 5 days, nothing changed.
Okay, got it. Thank you very much, sir. All the best.
Thank you, sir. The next question is from the line of Rahil Dasani from MAPL. Please go ahead.
Yeah, hi, I'm audible.
Yes, sir. Please go ahead.
Yeah, good morning and thank you for the opportunity. I just wanted to get a better idea on our drone segment. Previously, we were into the smaller range and payload drone, the Nagastra, and now we have tied up with NAL for the higher range and payload model. So first of all, why this change? Because we have been getting very decent orders in Nagastra itself. Are we seeing a larger demand come in the 500 to 1,000 kilometer range drones? And if you can quantify how large a demand or opportunity are we seeing for this particular model?
So I think we have shared a couple of times that the company is very well positioned in this market, especially on drone-based ammunition programs, which we say loitering ammunitions. So after launch successful on the Nagastra 1, we have started making Nagastra 2, Nagastra 3 also for some of the special applications. And as we are moving forward, definitely it's a natural growth for us, or it will be a natural growth for us to expand in the higher category of drones. So looking at those kind of opportunities, we are entering into the higher altitude and longer endurance levels of drones category. So we will see how we will establish our products for those applications. So we will come to know in next couple of years.
Okay. And being in service with our Nagastra 1 since so long, and since we have been in close connect with the government for all our orders, what sort of a visibility or opportunity are we seeing for this particular, if you can quantify that?
It will be very difficult for us to quantify this opportunity. We have to wait for the real opportunity or the real potential of this segment to unlock.
Understood. Okay. And sir, we have been seeing a lot of drone demand, especially post-operations Sindoor. There has been an emergency procurement ongoing. How worried should we be about this demand sustaining? As we have seen in the past that during emergency procurement, lots of demand comes in the short term, but then the demand dies in the next 1 to 2 years.
It's difficult for me to comment on this question.
Okay. Sure.
Yeah.
Thank you.
Thank you, sir. The next question is from the line of Ankur from HDFC Life. Please go ahead.
Yeah. Good morning, Manish ji. Thanks for your time as always. First question was on the domestic explosives business. If you could just help us with the volumes for the current quarter, that is Q1. I'm sorry I missed that. And also, how are you seeing volumes? What will be the volume growth for the full year? Obviously, given the unseasonal rain and, there's been some slowdown there on the mining side. So, yeah, just to start off, if you could help us there.
Yeah, thank you, Ankur, for the question. Since as a policy matter, we do not share the international market volume, so we have discontinued for the domestic market also. Because if you see on the number front, domestic market hardly constitutes around 40% of our total revenue.
Okay, fair. So on the volume side, overall, what kind of growth would you be looking at on the domestic explosive side? Any guidance there which you can share?
So like we said that we are targeting around 15% volume growth in this year. But if you look at our clarification that because of early monsoon and lower than expected heat wave resulted into lower demand for the power, and as a result it has impacted the coal mining as well. If you leave this part aside, then definitely there is no dearth of growth for us in this market. So once this thing settles, which is little abnormal to see that last year also there was a above normal monsoon, and then in this summer the heat waves were lower than the normal ranges, and then again the early monsoon in this monsoon period. So that is impacting the demand, but otherwise it is good for the long-term requirement angle because more availability of water will help to generate power uninterruptedly for especially for thermal power side. So we think that after the post-monsoon, the demand should be very, very good.
Got that. Okay.
And we have also done sort of capex program for the company which we acquired a couple of years back, which is at Rajasthan. And we also started our facility at Dhule. So if you take these expansions into the consideration, definitely market penetration and the volume growth should start very soon.
Okay, fair. And just a second question. So then overall for the full year, I know since you're not giving a volume guidance anymore, Any revenue guidance for the full year? I think the number was closer to 10,000 crores for FY26. And within that, I think defense was around 3,000 crores. So if you just want to talk about how do you see the full year FY26 top line within that defense, and also in defense, which would be the products which would drive that growth for you this year? Some color there. Yeah.
Yeah, I can show some colors on this aspect. If you look at our annual guidance of 10,000 crore, so we are still believing that we will definitely cross 10,000 crores in this financial year. And out of that, 3,000 should be from defense, and non-defense should add to around 7,000 crores. And as far as the products which will give the momentum will be, one of the key products is Pinaka series of rockets, which should start from end of Q2 or start of the Q3.
Right. Got that. Okay, sir. That's all from my side. Thank you.
Yeah, thanks.
Thank you, sir. The next question is from the line of Yogansh Jeswani from Mittal Analytic Private Limited. Please go ahead.
Hello, am I audible?
Yes, please go ahead.
Yeah. So just a couple of questions on your drone. So like you were telling about the natural progression that you'll be doing in Nagastra 2 and 3, and rightfully so. So, but sir, we are also seeing a couple of bigger players coming in this market, like New Space is there, Adani is there, Tata also. Though some of them are facing challenges in terms of their technical viability and all, but still there is a lot of decent, serious competition coming in. So one, how are we thinking about this? And secondly, sir, we did some work and we realized that you have got good score in terms of your technical capabilities in this. So if you could just help us understand how much is this, valuable versus the commercial, and how will the pricing part work for these longer range drones?
So as far as the potential of these products are concerned, like I said, we are still in the development stage. We are looking at this higher category of drones as a part of our strategy. So once our products are developed or qualified, definitely we will see how to place our commercial part to take the orders of the total opportunity. As far as other players' challenges are concerned, I cannot comment on that. So we have to wait for the AON, which has been considered in the last week, that the country wants so much of higher category of drones. So we will see how it unfolds, but our company is definitely trying to enter into this league of higher category of drones, and we are confident that we will have certain challenges to reach to that level. But as we have demonstrated in the past, that we are one of a company which definitely achieve what we try to promise. So we need to wait for some period to give more light on these programs.
Right. And sir, on the cost side, will we be relatively cheaper compared to the existing foreign drones like Riley 1 and the other one?
So I think we have not still reached to that stage where I can comment on the commercial part. But like you have seen that in Nagastra also, there were a couple of people participated, but our products were qualified and from technical side, and then we were the lowest bidder as well. So I think we have a fairly strong chances to enter in this and take orders, but we need to wait.
Got it, sir. And sir, one more question from my end. So, if you could broadly help us understand what are your internal timelines in terms of the design and development of this entire project, and especially given the fact that compared to our peers, we are even trying to make the engine in-house. So, what is the readiness of the team? At what stage are we in? How confident are we? If you could just broadly help us, understand all of those aspects, it will be really helpful.
Yeah, that's fair question, but we will share all these details at an appropriate time, so you need to wait for that.
Fair enough, sir. Thank you, sir. I'll get back in the queue, and best of luck.
Thank you.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your question to one per participant. The next question is from the line of Abhishek Mehra from DAM Capital Advisors Limited. Please go ahead.
Yeah. Hi. Thank you for the opportunity. So I had a question on the order book position, like in terms of if I only see the historical quarterly defense order book position, it usually increases post Q1. So Q1 inflows historically remain lower. So is that reading correct?
Can you repeat your question?
I think this question is very irrelevant for us to answer because as and when we received orders, we shared with all the investors. There is no trend of defense market in the history of, say, if you take 2 years back, there were no orders, not much orders. In the last year, we have collected so many of orders. You can expect the particular trajectory of getting orders on every quarter basis.
Okay, so fine. And so secondly, just wanted to have an understanding on the defense tendering part. Are there any sharing of orders between L1 and the other bidders, let's say L2, where they would be matching the price of L1 and the orders are getting shared there? Does that happen generally?
I think every tender have its own terms and based on the requirement of the end users. And normally sometimes it is 60-40, sometimes it is 70-30, sometimes it is L1 gets the whole order. So it varies from each tender to tender.
Okay, sir. Okay, fine. Yeah. Thank you, sir.
Thank you, sir. The next question is from the line of Chirag from Centrum Broking. Please go ahead.
Yeah, hi. Thank you. Sir, question is on the overseas markets. So what kind of revenue outlook we have in overseas markets since Q1 has seen very strong scale up, and whether Kazakhstan and Saudi Arabia plants will start commercial production this year?
Yeah, we are trying to start our Kazakhstan plant in this financial year. Hopefully, by October we should start the plant. And as far as revenue potential from this international business is concerned, we are doing at around 37-38% of our total revenue of the company. Say in this year, if we have given a guidance of around 10,000 crores, so we are expecting around 4,000 crores from international market, 3,500 to 4,000 crores.
Okay, sir. Thank you. That's helpful. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Bharat Shah from Ask Investment Managers Limited. Please go ahead.
Yeah, hi Manish. Yet again, a very creditable performance. Just one thing, I noticed on the the application of hyperinflationary accounting standard. Therefore, there is a loss recognized in the first quarter of 17.5 crore, and there is an income recognized for the last year transferred to the reserve of 9 odd crores. So either Shalini or Anchal, just wanted to understand, is this going to be recurring feature? Every quarter this will be stated and taken into account, isn't it?
Yes, sir. Shalini here. So we have hyperinflationary account in Turkey. So currently the figures are around 18 crores, which affected our P&L for this quarter, and 9 crores in reserves. So this is as per the accounting standard and non-cash items, so it will be accounted. And
so every quarter this will be done, right? Wherever it applies, whichever geography it applies.
Yes. And this quarter, if you see, we had, due to the uncertain economic uncertainties across the globe, we operate in various currencies. So as a result, even currency forex fluctuations were also there in the books, as a result, which affected the EBITDA margin to some extent. So around 1.5% was on that behalf.
On account of the currency fluctuation?
Currency fluctuations and hyperinflation. As a result, the other expenses went up. by the
Okay.
resident.
So hyperinflation plus currency fluctuation together had an adverse 1.5% impact in the current quarter.
Yes, sir.
Okay. Last year, I think it was a positive when it was taken to reserves.
It was, last year hardly around 0.35%.
Manish, given the fact that we'll be growing at a robust 35% on revenue terms compared to last year, and assuming no other elements like currency and others affect, then would it be fair to assume, given also the fact that defense will become a larger percentage, international will become a larger percentage of the total turnover, both higher margin activity, overall margins in the current year should be higher than last year? Is that a fair assumption?
Sir, like we have been saying that we normally expect, or as a prudent practice, we feel that achieving around 27% is also a big achievement as far as the overall positioning is concerned. So in this year, like you said, or we have said in the last call also, that we are targeting 10,000 crore in this financial year, and out of that 3,000 will be, approx 3,000 will be from defense, which means that definitely there is a big jump in the defense, which is a high value added product. But at the same time, we should also understand that as we are entering into the more and more products, so definitely we need to spend more on the staff cost side, and we have to expand the capital base. So during certain period, you will see that staff cost has gone up, some other expenses has gone up, depreciation gone up. So these factors, if you take into the account, achieving margin of around 27% is a reasonable expectation from our side.
Okay, noted. And one last question, Shalini. What is the gross debt and net cash position as of the day?
Sir, before answering on that part, you have asked on the translation, and Shalini explained on the forex loss account also. So since we are operating in many countries and many currencies are there, so foreign exchange loss is now part of our business. But in this quarter, it was little above that normal bandwidth. So around 0.8 to 1% we lost because additional loss because of that. And if you look at the staff cost also, there was increase of around 0.7% in the percentage. If you take both and add into the current EBITDA, so we are still at a higher trajectory of EBITDA margin side, sir. And now she will explain on the debt part.
Yes. No, Manish, I did see that, and that's entirely correct. Manpower cost has gone up. Obviously, investment in assets has resulted in depreciation going up. And these hyperinflation accounting impact also came in. Forex impact I didn't know, so that is an additional factor. So that's completely understood. Thank you.
Thank you, sir.
Yeah, and as for the cash position, so as on 31st March 2025, we were 100 crores plus net of cash position, and currently we are at 50 crores cash position positive.
Net cash position.
Net cash position, correct.
Okay. All right. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Pratik Mukasdar from RNL Wealth. Please go ahead.
Yeah, congratulations on a solid set. My questions got answered in the previous questions, so thank you.
Okay.
Thank you, sir. As there are no further questions from the participants, I now hand the conference over to management for closing comments.
I extend heartfelt gratitude to all the participants for their time. Thank you so much.
Thank you, ma'am. On behalf of Phillip Capital, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming con calls.